Today, we're diving into one of the most powerful and often underutilized wealth building tools in real estate, using your retirement accounts to invest in real estate. I'm Kathy Fettke, and welcome to the Real Wealth Show.
You're listening to the Real Wealth Show with Kathy Fettke, the real estate investor's resource.
Today, we're bringing back Leah Collich and Stacey Stenenga, two of our investment counselors at Real Wealth. And if you like today's show and are ready to invest in real estate, just visit realwealth.com/schedule to get a free consultation with one of them. Stacey and Leah, welcome back to the Real Wealth Show.
Hello.
I'm excited about today's topic because, again, it is underutilized. A lot of people don't realize they can invest in real estate through their IRAs or 401ks. So let's start with the basics, starting with you, Leah. How do you do that?
Yeah, a lot of people think that incorrectly think that their retirement accounts have to stay stuck in Wall Street, which right now that feels a little bit dicey for some people. Investing in traditional stocks, bonds, and mutual funds comes with some swings, as we can see as of recent. But with a self-directed IRA or a self-directed solo 401k, you can direct and choose your investments, selecting real estate investments. So this includes owning rental properties, investing in syndications, owning land, even investing in lending. So this is a way to just really create some good diversification in your retirement planning and invest in something that may feel a little more tangible and slow moving.
So, Stacey, if someone just went to their financial planner and said, hey, I want to take my 401k or my IRA and invest in real estate, what do you think they'd hear?
They'd probably hear a lot of naysaying. I actually do hear about account custodians try to talk people out of this all the time, which is one of the biggest reasons I do recommend they find a custodian that is experienced in the self-directed IRA and the benefits of real estate.
Yeah, because a lot of those brokerages can't actually do it. So they'll just say, well, you can't do it. But that's because they can't.
Then they don't make the money.
Yeah, they don't make the money. Yeah. So saying, take your money out of the accounts I'm managing and give it to someone else, they're probably not likely to do that.
Or a lot of them will steer you in the direction towards REITs. They want you to invest in a REIT, and they think that is, they'll try to sell you on that's how you can invest your retirement accounts in real estate.
Yeah. So how do you go about it then?
You do have to set up a self-directed IRA account. So you do have to do a rollover. We have a wonderful self-directed IRA intermediary that we recommend here at Real Wealth. Your good friend, Kathy Karin Hall at UDirect, has been our go-to for many years. Many of our investors work with her. So she can help you get a self-directed IRA account established. And then you're selecting the investments that you want. So the custodian will give you some guidance on the paperwork that's required to fund those investments directly.
Yeah, this isn't something you want to do by yourself. You want to have an expert certainly help you. So, Stacey, what kinds of retirement accounts can you self-direct?
Yeah, so you can do both the traditional and the Roth IRA. They will continue to grow, either tax deferred or tax free, based on which account you elected to roll over. But again, it just allows you to diversify into that real estate versus limiting you to the stock market. So this is a great option for those tech investors that are forced with those golden handcuffs with all their stock options through their employers. And you might be over leveraged in the stock market. And now you can use this extremely powerful tool to diversify.
Yeah, it's interesting. Over the last 15 years, a lot of young people didn't really realize that the stock market's volatile. I've been around long enough to know, but I've heard it from young people like, why wouldn't you put your money in the stock market? You can make a 20% return. It's like, that's dangerous thinking. I mean, this last few months, I think, was a wake up call for a lot of people.
The fact that you can not only like buy the actual asset yourself, like owning the property and have complete like autonomy in that investment is one thing, but then you can also use it to self-direct into syndications. So you can be, totally hands off, but have your capital going towards a strategy that maybe makes a little more sense for you. I mean, that was my frustration with traditional investments was I couldn't understand it anymore, and I couldn't predict it, and I didn't feel like I knew what choices I could be making intelligently long term. But with something like real estate, I could look at a deal and I could rely on some of my own understanding of projections and make more informed decisions on the investments.
Plus, we've done a lot of comparisons. You're not getting the leverage. That's the hugest difference. In real estate, you're borrowing money to buy the asset and someone else is paying that off for you. You can't compare the performance of the stock market with the performance, quote unquote, of real estate when all they're looking at is how much have real estate values gone up versus how much has the stock market gone up. You're not accounting for tax benefits, rental income, appreciation is there, but appreciation just on the capital invested. You're getting appreciation on the whole thing, even the money you borrowed.
And the debt pay down, it's priceless. Yeah, I completely agree. I got so tired of this argument. I think I mentioned on a previous episode, my brother was a commodity trader. So for a long time, it was a really fun argument for me to have. But once I experienced the power of real estate and that growth and the compounding, the equity and all of the benefits tied together, I literally cannot entertain. Real estate just blows the stock market out of the water in my perspective.
I agree. I keep trying to want to to be a traditional investor, and I look at it and I'm like, wait, but you're forced to take the money out and get taxed on it at some point, whereas real estate, you might not ever. Some people say that it's better to self-direct with a 401k than with an IRA. What are your thoughts on that?
Yeah, so I think it's a great option for our self-employed individuals, for all the entrepreneurs that are also trying to invest but miss out on some of those investment account vehicles. The solo 401k is for you. So you can use that to self-direct into real estate. You have the benefit of the non-recourse loans. So again, it's just a different type of vehicle and account more specific for those entrepreneur type self-employed individuals.
I've actually heard some pretty incredible strategies mentioned by some of our tax advisors and legal experts at RealWealth, leveraging the solo 401k in really powerful ways to create some good loops in your overall strategy.
Yeah, you guys, and these webinars are free for our members, and it's free to be a member. So what are you waiting for? We have, over 500 webinars, and many of them from CPAs where you'd have to pay hundreds of dollars to get, hundreds, if not thousands of dollars to get this kind of information, or more likely your CPA just doesn't even know it. So check it out. We're not going to talk taxes, but I can tell you there are incredible benefits, and hearing other people's investor stories is really, really inspiring. So financing's a bit different, right? You can't get conventional finance. So what can you get?
Yeah, it's required that you get a loan called a no recourse loan. And that essentially means that there's no recourse to you, the borrower, if you default on that loan. It's collateralized on the property itself. And so this is a riskier loan for a lender to give. And so I always tell my investors, you see that reflected in the terms of the loan, generally speaking. They usually require a little bit more money down, sometimes 30 to 40% down. And then the interest rates are a little bit higher. So, you got to keep that in mind when you're analyzing property. And you also have to be aware of an additional tax that gets triggered when you are using leverage in a tax optimized account. It's called the UBIT tax, the unrelated business income tax. And this is something you just want to be mindful of. You need to have a conversation with your tax preparer about this before you choose to self-direct and use a no recourse loan, because UBIT tax can eat into the return pretty significantly. I mean, somewhere between 30 and 40% in worst case can go towards that UBIT tax. So there's just some additional questions that need to be asked before you jump in on getting a no recourse loan and buying a property leveraged.
Oh my gosh, and we've learned this in the syndication department. If you invest in one of our syndications and it's an active one where we're building houses and you're partnering with the builder, that makes you active. That can trigger the UBIT, and investors are like, what do you mean I'm getting taxed in my IRA? That's not fair. And exactly, it's not fair. So be sure always to talk to your CPA before investing in anything, especially when it comes to your IRA. But honestly, everyone's taxed differently. So why not just make that phone call for sure?
I do just want to clarify further too, though, that is only triggered when the loan is drawn from your account. So that is the benefit of investing with an SDIRA into a syndication where that loan is not required and you're only investing in an already established asset. You don't have to worry about that. So there are still ways to use the SDIRA to invest in real estate without having to worry about that additional tax burden.
For sure. I mean, if you self-direct and invest in one of our syndications that is passive, where you're either investing in a loan or in a cash flowing property, that's different. It won't trigger that in most cases. But again, don't listen to us, listen to your CPA, make sure you listen to the expert. It's just important for you to know about that. Okay, well, what are some of the big do's and don'ts when you're thinking about investing in your self-directed IRA? But I first want to point out, I used to get the question a lot. Oh, does that mean that I'm taking money out of my IRA and there's going to be penalties? You hear that a lot, right? People think that if they use their IRAs or 401ks to buy real estate, that they have to borrow the money from it, which you can also do. But then there are penalties for that. But self-directing is different.
Exactly. Yeah. There's a very big difference between the two. So, for this conversation today, we're discussing you are setting up a self-directed IRA account. There is no penalty to do so. You have autonomy to direct into these assets. There are some very clear don'ts though, that you want to be mindful of. Your personal involvement in the investment has to be more limited when you're investing in a self-directed account. So you can't be personally managing the property. You can't be doing repairs yourself. You can't have personal use of the property. You can't be housing a family member in this property. So there are some very clear rules that need to be adhered to make sure that you don't trigger any penalties or consequence.
I'm so glad you brought that up. Yeah.
And then another really important one is that you can't commingle funds. So, some people think that they're going to go and invest with a self-directed IRA so that they can get cash flow, but the cash flow from that investment has to go back into the retirement account. Yeah. And a lot of people aren't thinking about that when they're considering these purchases. Also, the maintenance that might be required on that property. If the home needs a new roof, or if you have to do some very expensive repairs, the money for those repairs has to come from the retirement account. So again, these are just things to be keeping in mind. You don't want to spend your last dollar in the self-directed IRA account on the acquisition because you need to have some cash in that account to take care of the investment too.
I think another, it can be considered a con, but I personally view it as a pro, is the fact that all of your returns also have to flow back into the account. So I do like to clarify for people, you are not going to get the dividends payout. It goes back into the account that you initially created for your SDIRA. Now, I view that as a benefit because it forces your hand, causing you to have all that money ready to reinvest. And I attribute all of my success in real estate to that fact. I have yet to spend a single penny on myself of my earnings from my real estate properties. I just continue to reinvest. And that is exactly what's allowed me to compound my success more rapidly.
And one of the best types of properties to get is one that's going to appreciate, in my opinion, because if you sell that, if you just bought a property outside your IRA, just normal purchase, and it goes up $100,000, you sell the property, you're going to pay capital gains. Or if it was within a year, you're going to pay ordinary income tax. But if you do it within your IRA, all that appreciation, all that profit just goes back into the IRA. You can't be flipping properties. I don't think. I'm not an expert, but it shouldn't be an active. It has to be a passive investment. But if you buy an appreciating area and the value goes up a lot, that's wonderful. That means that when you sell it, it just goes right back into your IRA. Okay. I would love to hear some success stories of clients that you've seen utilize this successfully.
A lot of our investors at RealWealth are choosing to self-direct into our syndications because it is a totally passive option. For a lot of people, they might not have quite enough capital in their retirement accounts to go and purchase a property outright in cash. And maybe they tend to do the math with this no recourse loan and realize, okay, the returns are kind of diminished when I have to factor in UBIT or the loan terms. And so when they take that idea of like leverage out of the equation, they're oftentimes left with, somewhere between $50,000 and $100,000 to self-direct. So it's very easy to, jump into our syndications with that amount of capital, and again, be totally hands off.
Yeah, I agree. We had somebody back in 2005. I mean, this was before either of you were with the company, and he had a sixth sense that there was something bad going to happen with these liar loans that everyone was doing. So he took all his money out from the stock market and came to me and said, I've got, he's self-directed and had about $600,000. And he put all of that in Texas and with our team in Texas. And oh boy, did he make a killing. He did so well. I remember he would come to our meetings in a Hawaii shirt with a glass of wine and be like, retired,
He's a new man.
I know. It was so funny. And then he didn't feel any of the stock market crash that happened just a few years later.
Yeah.
So
I mean, it goes back to the age-old saying, don't put all of your eggs in one basket. And there's just so many of these industries, like I said, with the tech and, all these businesses that they force their hand with these 401ks. And so I just love to tell people about the self-directed option so that you can diversify. And if nothing else, alleviate the burden of massive losses if something does happen to our stock market.
love it. Okay. Well, once again, as a listener, if you're excited about this and want to learn more, you can do so. Just go to realwealth.com/schedule, and you will be able to book an appointment with one of these lovely and very, very intelligent investment counselors to find out more about self-directed IRAs or any other kind of investing in real estate. We are here for you. Stacey, Leah, thank you so much for joining me again here on The Real Wealth Show. And thank you all for joining me. We will see you next time.
Views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.